Hey guys, what's up? Hope you guys are having a great day today. Welcome back for another weekly market analysis episode. And today, honestly, we really don't have a lot of trades. I was really hoping that we would. As you can see on the far right here on my massive currency pair portfolio, we have a lot of bookmarked paid currency pairs here. So there's a lot of currency pairs. Some of these are ones that we are already involved in, but most of them are not. Most of them are potential trades that I hope to be able to take if they come to fruition. Some of them are opportunities I found late, and I'm hoping to get a second shot at them. And others are ones that haven't come to fruition. They haven't even hit my entry at all, and I'm hoping that they will hit my entry as time goes on. But so far, none of that has happened. We're currently sitting on five trades. Right now, the Aussie Yen, I want to go over this one because this actually came to fruition quite beautifully, if I do say so myself. It hit our entry point here, kind of consolidated around the entry, came down. I thought we were going to get stopped out for sure after it made a new lower low, lower close. But then it rallied straight from there, quite amazingly, to be honest. I mean, I'm shocked that it did this. It just rallied, didn't even skip a beat. So that was a good $161 winner here. I'm going to pull over my trading journal. All right, right here. So it's $161, not too shabby. Now, granted, I'm looking at all these other trades. If you look at these are all quite large ones. Not to mention this one up here, the pound dollar isn't looking too good right now. So let's go ahead and go over all the trades that we're currently involved in and what the situation is with each one. Pound dollar is unfortunately on page 2, so I got to go all the way back here. And we're going to fast forward. So you see, yeah, we got within a few pips of there, and we just never touched. And now, unfortunately, we came under here, we closed below, and we broke below this structure low. And now we are waiting to see what happens. I mean, so far, this is one that's going to make us wait for a while. I mean, we haven't. Man, I so wish we would have gotten filled there and I would have been able to close this out. This would have won us 296 hypothetical dollars. Unfortunately, it did not. If we lose this, it's going to lose 194, so that's not positive. So, I mean, honestly, I'm not feeling too strong about it, considering the fact that it did get rejected here. Let's go ahead and zoom out here a bit. Basically, it got rejected here. I think this is a double top. So we're probably going to break the V right here, which technically speaking, we've already done. And it's just a matter of seeing, is it going to continue lower or is it going to continue higher after that? After double tops, you never really know. A lot of times they end up just breaking the Vs and then they end up rolling, going in the opposite direction and not really holding to fruition. But I mean, I don't know. That one, your guess is as good as mine. All right, next one is the Euro Pound. We're involved in the Euro Pound. I thought we were going to be winning here. As you can see, we got all the way down to 86.90, and then we totally just reversed them. And yeah, not looking too good. We broke above this structure high right here. Or I guess I can't really say it's a structure high. It is higher than all this stuff right here, but not higher than that. So we broke above this structure level, and we are now retracing, and it's going to find support here and probably rally and stop us out. So this is another frustrating one where we got pretty close, not nearly close as the pound dollar, but we did get close. And unfortunately, it looks like it's not going in our favor. Yeah, sometimes that's just the way that happens, but, you win one trade and you lose 5 others, right? So, pound Swiss, a very similar story. We were kind of coming up here. We weren't really all that close to the target, in all honesty. We just didn't really get that high up, and then we broke below structure level. And, now we're looking like we're going to very easily get stopped out here. This is one of those situations where the pound Swiss obviously was bullish for a while, or, I mean, it's hard to tell because we're actually in a window view right here. So we're not really, I'm not looking at this as an actual chart. So that is in fact a bit of a problem. But yeah, we were definitely, we appear to be bullish. You know what? Let's go ahead and let's just pull up this chart right here, just so that we can see what we're on. We're on pound Swiss. Is that what I said? I believe it was. Let's look at pound Swissy here. Pound Swiss. Here we go. Ah! It didn't even have our stuff. Okay. So, we were bullish since March 19th. But in reality, we're actually bearish. So, this was a bet that I was taking, that this little bullish trend, this not really reversal, this was really more of just a retracement in the overall market. But the overall market has been bearish since December of last year. And let's see if we go even further back, does it go even higher? It appears as though it does. So, in fact, we had a bearish trend here, but then we had a bullish trend from August 2019 all the way to December, and now we're back with a bearish trend. If we were to zoom out on the daily chart, this would give us a really good idea of what's going on. Oh yeah, look at this. We are definitely bearish for sure. So this is just more of an indication that, you know, that this is probably going to stop me out. But anyways, sometimes I like to take these bets. You never really know. I mean, the market goes on a little bit of a bullish retracement in a bearish trend, and you can have small trends within trends. That's something you can have. You can have a tiny bullish trend in a overall bearish trending market. So it's absolutely possible to have that, and that's precisely what we have right here. We have a bullish trend, a small bullish trend that is acting as a retracement in a overarching bearish trending market. So I was taking the bet that because we broke higher here, we were going to continue higher. But this is a double top, I believe, and the valley has definitely been broken, but this double top appears to be one of a reversal. So, yeah, probably going to get stopped out of this one as well, unfortunately, and I'm not too happy about that, but, you know, sometimes that's just how it goes. Now we are on New Zealand dollar. We got filled on, or at least we entered the New Zealand dollar on May 3rd, and we've kind of been just going sideways. We came very, very close to getting our entry level. I don't know why this is all the way over here. Really think this should be probably like right here, something around those lines. Okay, right there, something like that. You know, so we started coming up here. We got very, very close to hitting our target, and then we're falling right now. Again, we are bearish once again, so the overall market appears to be bearish. So in reality, I mean, we could just continue lower. Once again, this was another one of those situations where we broke this structure high right here. We made a new higher high, higher close. Then we reversed, had a retest, and now we're looking like we're going to fall over. So I was just taking the bet that, hey, since we broke higher, we're going to continue higher. And I may be wrong with that. It's kind of looking like I might be. But we're still around the entry point, so there's still time to see what's going on with this trade. But for right now, unfortunately, it's not something that I'm feeling too strongly about, considering the fact that all the other ones are going in the opposite direction. I already showed you Aussie Yen, so we don't need to do that. Okay. New Zealand CAD. Okay, that's the next one. Okay, New Zealand CAD is the one that I actually took last night. So I try to do a little. Normally what happens is I come in on Monday and I actually look at the charts and I see if there's anything that looks like there might be a trade setting up. Looking at the charts on Monday gives me a pretty good idea of what I'm looking at, and it gives me a good idea of what could happen going forward into the next week. So I like to look at Monday, or I like to look at the charts on Monday, and then I like to look at the charts on Wednesday. So I like to highlight potential trades on Monday and then wait till Wednesday to see if they come to fruition. That's generally how I like to do things. But on Monday, my wife took the day off because of Mother's Day, and, well, it was really more because her birthday. Her birthday was the week before Mother's Day. And so, you know, she took a day off, and I took the day off with her. We got out of the house. We went to go walk around a really, really, really nice area, a nice neighborhood. that's close by to us, and it was nice. I mean, we saw some really expensive houses. Got to dream a little, but that being said, though, we had a great day. It was absolutely wonderful, but I didn't do any work whatsoever. And sometimes, guys, look, we're doing this type of stuff, right? We're trying to become financially free so that we can live the life that we want. So if we just want to take a day off, we can. We are our own bosses. That's the whole point of this. What's the point? I mean, there's a lot of business owners that become business owners, and the business ends up running them more so than they end up running the business. And they end up never having any free time. They end up being miserable, and that's just not why we're doing this. We're doing this so that we can live the life that we want to live. You want to live the life in Europe and go travel? Maybe you want to live in France or Italy, wherever. I mean, hey, if that's what you want to do, then great. But you need to have mobile income. You need to control the source of your income in order to do that and become financially free. That's why we're doing this. So make sure you remember that going into this. All right. That being said, New Zealand CAD, we broke above the structure high right here. Closed above, broke above, closed above with this candlestick right there. It was a very, very nice break. And now we've been trending sideways ever since. We got our entry here. I didn't see it at that time. Really, I saw it over here when we saw it here. And then, so what I did was I placed my blue line right here saying, okay, I'm seeing it at this point. If it comes back up, which it did within the next hour, then I'll go ahead and get long. So I did. I went ahead and I got long, and we are now long this New Zealand CAD. Now, what direction is New Zealand CAD heading in? Well, it's been bullish since March 23rd, and it's kind of going sideways, and it's looking like it's losing steam, and it broke below right here. It broke this structure level right here. So I don't really know. In all honesty, we've been bearish since December of 2019, and then we kind of, so this could be another one where I get caught out of the whole situation and end up getting stopped out. Sometimes this happens with trend continuation patterns or with a trend continuation strategy where you're trending in one direction, but then that direction that you're trending in, this little bullish retracement, is simply in an overarching bearish trend. So what you would want to do, which I admittedly did not do, what is zoom out to the daily chart, tell me what the overall trend is. And if I had you guys on here live watching me, you would probably say, well, we were bullish at first. Clearly we were bullish here. We had a little bit of a bearish retracement. We came up here, we retested, came down, broke below. So a little bit of a bearish retracement here, just in the overarching bullish trend. And then we became bullish again, and now we're bearish. Now, is this bearish now that we're bearish, and we've been bearish since October of 2016. Okay, 4 years ago. We've been bearish for 4 years. And as you can see, we've had little tiny, that's not what I wanted. We've had little tiny bullish trends inside of the bearish trend. Okay, you can definitely see this. We've had these little tiny bullish trends inside of this overarching 4-year bearish trend that we're in. So the question is what's going to happen? Is it going to continue to be bullish? Are we going to continue on this little tiny bullish trend? Well, consider the fact that we're going sideways after we broke above and made a new structure high, especially this structure high right here. We broke above that as well. It's kind of looking like we're losing steam. We're losing momentum, and that we're going to start to fall here. So that, I think that's kind of what's going on, but you never really know. So I figured I'd go. I mean, hey, my strategy is I see a break of structure, I wait for it to retrace into the 618 retracement level, and then I, go long or short depending on the direction of that trade. That's my strategy. Is it going to work this time? I don't know. So far, past couple trades here, no, it's not been working very well for me. Hasn't worked very well. But, I'm also doing this on a lot of different currency pairs that, to be completely fair with you, I haven't backtested. You guys know that. I've been saying that for a long time. That's not new. That's not nothing new. But yeah, so it's definitely something to consider. But so that's the New Zealand CAD, and now is the Aussie USD. Now, I'm not actually involved in this trade. You're probably going to ask why. A, why am I showing this to you? And B, why are you showing this, and why do you have all the lines drawn as if you were? Well, to be completely fair with you, I wanted to be honest, and I wanted to just show you that I'm trying to be honest, okay? Because it was tempting to get involved in this trade. I had drawn my fib retracement tool from the swing low to the swing high, and I had gotten entered right here back on May 3rd, so 10 days ago. But to be completely fair with you, I didn't put the yellow entry line on. I never did that. So because I never did that, this is not a trade that I actually got involved in. Now, I was tempted to say, well, I know I didn't put my yellow line on, but no one's going to know that. Put the yellow line on anyways, and just, this is already looking like it's going to be a winner. You really need a winner, and just go ahead and do it. That's what I was tempted to do. I think any normal person would have been tempted with that, because it's not like anybody else would have known had I decided to do it. I chose not to do it because I didn't think that was honest, not only to you guys, but it's not honest to my trading journal. It's not honest to the trading, right? Because I automatically knew that there was a pretty high chance. I mean, we've trended all the way up here. We've had a little bit of a retracement here. I mean, look, there's a pretty darn good chance that this is going to continue higher. It might not. It could fall through the floor and get stopped out, but probably going to continue and rally to hit new highs. And it hurts. I mean, look at what we're doing here. Let's look at this equity curve, right? I mean, this isn't exactly easy to trade like this. As you can see, we've hit new lows, and we had a new high up here at 3,800, but now we're coming back down, and I don't see any sign of it going higher. I see signs of it going lower. So far, rather miraculously, it's just been going sideways. Our winners, our losers, and our winners are just kind of equaling each other out. And it'll be interesting to see, since this is unbacktested, it'll be very interesting to see what's going to happen with this strategy overall. And it's going to be very interesting to see whether it's going to just totally blow up my account or not. Now, again, we're only trading one position size, which is 10,000 units, and we're not increasing position sizing here. So that is a huge factor as to why we haven't blown this account up already. But it's just something to keep in mind. I'm trying to be intellectually honest. I'm trying to be honest. I'm trying to show you guys that, look, even though this is all hypothetical and it doesn't really, well, I shouldn't say it doesn't matter. Of course it matters. If it didn't matter, why would I be doing it? It does matter. I'm forward testing a lot of these currency pairs without back testing, which is out of order. You really should back test and then forward test. And I'm also trading on what I see as live data. So that has a massive amount of effect on your psychology when you're doing this kind of stuff. So anyways, I just wanted to show you guys that I'm being honest with you here. I could have taken this trade. Nobody would have known that I did it. Nobody would have had any idea that I didn't actually put the entry on. But I would have known. But you see, this is the type of issues that you deal with when you don't backtest. You struggle with your psychology, and after you lose and lose and lose and lose, you want to justify things that you can't justify in real life. Okay? If I was looking at this in real life, I can't reverse time and take a trade back here knowing it's going to go back up. I can't do that. I mean, I could put an entry on here hoping that this thing falls down, but honestly, if it falls down from here, there's a very good chance that it's just going to continue falling through the floor. So if do you really want to take the trade after a second retest of the entry level? I would do it, I guess, but I don't know how I honestly feel about it. It could work. It could absolutely work, but I don't know. So I guess, this is what happens. Your psychology messes with you when you're in the market, even when there's no real money at risk here. The psychology, the markets mess with your mind. And this is a good example of that. This is why backtesting is so important. Because if you're trading with real money, you can't just do this kind of stuff. And this is something that can really influence and mess up your performance. You do this too many times, and you say, okay, well, this. Let's say you see it here, and you're like, I'm not really sure I'm going to take the trade. And then you wait for this. And it's like, oh, I like that. Okay, well, now I'm going to take the trade, right? Well, you can't do that in real life. That is going to mess with your performance, and it's really hard. It's something you really want to watch out for in your backtesting. It's called confirmation bias. You've got the confirmation that you know it's going to go higher, right? You've got the confirmation here, and now that there's virtually no risk in the trade, now you want to get involved. You can't. The only thing you can say is, okay, now that that's happened, I want to wait to see if it retraces back and does a second retest of my entry, and then I will go ahead and get long. You could do that. That's absolutely something you could do. But to be completely honest with you, I don't know if that's going to happen. And nobody does. So I'm going to continue this thing here, and I'm just going to say, look, I found it here. And if it comes down and hits my entry a second time, then I will get involved. If it doesn't, and it continues to rally, well, then I lost out on my opportunity. But this is one way that you need to be intellectually honest with yourself. Don't get caught up in your emotions. Try not to, as best you can. At least, look, every decision we make based off of an emotion, right? We don't make any kind of decisions. We don't take any kind of trade if it was not for emotions. One of the reasons that we want to create this belief in our minds by backtesting is for the purpose of having enough emotional fortitude to keep to the backtesting. That's why we do backtesting. So in the end, guys, you need to understand that you can't cut emotions out of your trades. But what you can do is you can backtest, then backtest on historical data, forward test on live data, and then take your trades, put your entries, your exits on, and then walk away from the computer. That's the only way to help control your emotions. And if you're tempted to take a trade in your backtesting when you already know where the market is going, you know what? That could seriously ruin the performance of your strategy, assuming you do that too many times. 1 or 2 trades not going to hurt you, but you do that too many times, you're going to ruin your strategy because you won't be able to do that with live data. So just an interesting example. I wanted to show you this. I wanted to be honest with you about the temptations when you're backtesting and I wanted to show you guys that, look, I'm human. I struggle with the same stuff too. I'm not a consistently profitable trader. I've told you guys that a million times. This is my journey. I'm struggling with stuff just like anybody else. Okay? I'm not perfect. I'm never going to claim to be perfect. Even if I was to hit consistent profitability, I'm still not perfect. You're still going to mess up from time to time. But this kind of temptation thing, it happens to everybody. Okay? Sometimes we give in, sometimes we don't. In this instance, I didn't give in, and I said, you know what? I didn't put my entry on. I'm not going to take the trade. I didn't put my entry on because I took a lot of losses in this whole currency pair portfolio, this trading view trade analysis that I'm doing here. I actually took a lot of trades. I actually put a lot of entries on and ended up taking a lot of trades without actually watching it live. And as a result of that, I ended up taking a massive amount of losses. So I didn't put the entry on out of fear. Fear of losing, even though it wasn't even real money. I didn't want to lose again. Losing hurts. It sucks. It's not fun. Hopefully, I'll get to a point someday where the losses don't really affect me much. But in the end, I don't think that's ever going to happen. I think you're always going to feel the losses. They're always going to hurt and suck. That's just my opinion, though. All right, that being said, let's go ahead and move on. So those are all the currency pairs that we've got going for today, or all the trades that we have going for today. But I wanted to talk with you guys about how to identify a trend. I don't know if you guys know how to do that, but many of you many of you may not actually know. It may seem simple, all right? You're probably looking at a chart and you're probably thinking, oh yeah, well that's bullish. Oh yeah, well that's bearish. But do you actually know how to identify it? Are you just saying, yes, it's obvious when you're seeing it go from the bottom left corner to the top right corner. And these are the general principles that we talk about. If you want to know generally how to identify a trend, if it's going sideways, it's consolidation. If it's going from the top left corner of the screen, maybe up here, to the bottom right corner of the screen, it's bearish. If it's going from the bottom left corner, somewhere around here, to the top right corner, it's bullish. Simple as that. But how do you identify a trend normally? Like, if you were just to look at there's another way to identify a trend, is what I'm trying to get at. This is how. This is what you need in order to have a trend. You need an initial high. Let's see here. Okay, I figured it out. For some reason, I didn't have the drawing panel on. I had it off. I guess I never really used it before, so. Okay, we are going to go ahead and add a text. We had let's bring this up to 24. I want to do dark blue. Okay, light blue. I guess it doesn't really matter. All right, we had our initial low, IL is what we're going to call it. We had our initial low right here. We had our initial high, all right, IH, right here. And then we had, a retracement or an outside return. You can call it either one. I usually like calling it a retracement. So initial low, initial high, a new higher low. Okay, that's what we're going to call this. It's a retracement, but we're going to call it a new higher low, NHL. Right there. And then we're going to do this. Pull this back right here. Get these two lines to connect, because that's what's going to look nice. Now we have a new structure high. All right. New structure high. NSH. And so there's another way you could classify. So we have an initial low, an initial high, an outside return or retracement, a new higher low, and a new structure high. You could also say a new higher low, because this low is higher than the last one. You could call this a new structure low, an NSL. And then you could call this a new structure high, NSH, or a new higher low and a new higher high, HH. Either, it doesn't really matter. The verbiage is, look, all that stuff, they all mean the same thing, okay? It's important to know that. It doesn't, to some extent, it doesn't really matter as long as you know what you're talking about. So I like to do initial low, initial high. A new higher low and a new structure high, or a new higher high, or a new structure low. Well, actually, I would say a new structure low is probably lower. I guess a new lower low. So let's say a new higher low and a new structure high, or you could say new higher high. But this, anyways, doesn't matter. Like I said before, but this is how you identify. Not only do you identify that we're moving from the bottom left corner of the screen to the top right. So this is definitely bullish, right? Even if it's the bottom left, even if it's all the way up here, we're still going from the left corner of the screen to the top right. So even with that taken into consideration, this is still a bullish trend. But this is what makes a trend. This is how you identify it. This is what composes, or this is what a trend is composed of. So it's very, very important to understand this. This is how you identify a trend. Now, let's go ahead and apply this to the actual charts. So let's see here. Let's go ahead and start from down here. Because this is easy, I already know where it's going, so this will be a pretty good example overall. Alright, so we have our initial low and our initial high. We have a retracement. We have created a new higher low. Then we reverse and we continue in the direction. Now we have created a new structure high, a new higher high, higher close. If you're going to call it a new higher high, higher close, that could be classified as an N3H or I can't remember if it's N3H or NH3. I think it's an N3H. Anyways, your higher high, higher close that has 3 H's, right? And a new lower low, lower close would also, you could also call that an N3C, no, yeah, an N3L. An N3L or an NL3, new lower low, lower close, something of that nature. You could do that if you wanted. I've seen people do that before. It was rather confusing when I saw it because it's like inside baseball terminology that I had never heard of before. And I don't know if the industry, if that's like industry standard to identify things in that way. I don't think it is, but that would be another way to identify it. So we have another outside return, retracement, and then we have another new structure high. And we come back down. We got a new structure low, and look, where did the new structure low come to? Just like in this one, where did it go? Where did the market go? It came and it retested this structure level right here. You look left, structure leaves clues, right? So then we came up here, and now we're coming down. Where do you think it's going to go? Look left, structure leaves clues. Came here, found support, rallied. Boom! Like it's almost like someone planted a bomb under here and blew it up, and now look at it. It's all the way up here, and it blows all the way up here. All right, now we have another new structure high. New higher high, higher close. We retrace. Where are we going to go? We're going to come down here. Did we get all the way down there? No, we did not. We found support earlier. We found support above this structure level, but that's the direction we were going to go in. And then we continue to rally higher. And let's draw it up here. And then, of course, we continue lower. Retracement. Extension. Right? Every time the market makes a new high or a new lower low or a new higher high, we call that an extension. We call this a retracement or an outside return. I prefer retracement, so you could just say R. You could just identify it as R, retracement. And then new higher high, NHH. And the market extends. So the market always extends, makes an extension, makes a retracement, makes an extension, makes a retracement, extends, retraces, and then it's going to extend again. See, this wouldn't be classified as an extension because we retested and we got rejected. We didn't make the extension up until up here. We extended and we broke above, made a new higher high, higher close. Then we reversed or had a retracement, and then did we extend again? Well, we didn't extend here because this is just a wick. We never closed above this structure level. And here, even though we did close above the structure level, we didn't really close above this candlestick or this candlestick, so it's not really a new higher high, higher close. The new higher high, higher close didn't really come up until all the way up here. Yes, you could say that what about all these little, green candlesticks that stopped, and closed above here? Yes, those are closes, so you can definitely know that we have closed above, but you don't want to take trades based off these because how do you know when it's going to stop, right? I mean, just look at this. At this point, let's say right here, this was the highest point at which, oh man, that stupid little plus sign's going to get in the way. Right here, this is when the market closed above all the structure levels. So yeah, we are now at a new higher high, higher close position. But is it going? But we can't really take a trade based off this because we don't know if it's going to stop there. And did it stop there? Nope. It went higher. It went higher, went a little lower, went higher, 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 and here we are. And now we are going to go into a bit of a retrace. We're going to retrace. We're going to extend. I didn't click on it right. It would be very helpful. We're going to extend, making another new higher high, higher close. And then, of course, now, at first, this is looking like a bit of a retracement, isn't it? And we didn't really close below up until like down here. Okay, up until down here. Well, there's some candlestick wicks right here. Okay, so in this case, I know I just said that this is not considered a new higher, higher, higher close, or at least I wouldn't consider that, because there is a candlestick there that's in front of it. Really, it was more this candlestick that bothered me, more so than this one. But technically speaking, we did make a new higher high, right? But we didn't really close higher. We closed higher, but only here. And because of this candlestick, it just, to me, the new higher high, higher close was really up here. In this case, I would actually consider this, even though this red candlestick closed below all this other stuff, I would actually consider that this candlestick, and actually we should really extend this back down here, I would actually consider, well, you know, we'll do something fun here, that this was a new lower, low, lower close. There wasn't this wick didn't extend longer. It was just the wick right next to it. So that doesn't really count in my book. A lot of this stuff is subjective. You may see this and you may say this is not a new lower, low, lower close. You may think this is a new higher, higher, higher close. Okay, you may, a lot of it is subjective. It's all based off of what you see. All right. But anyways, we had a retracement. We got rejected. Big, you know, long wick here. We have another, we retest the highs, and then we get rejected. And then we make a new lower, low, lower close. Now, what happened here? This is now consolidation right here. This turned into consolidation, probably starting from here. Even though we made a new higher, higher, higher close, you can see we just kind of trended sideways. You see how the market just went sideways? Even though we made a new high here, it just kind of trended sideways for a couple minutes. So, you can see that it's very obvious when you draw it in with blue lines. And if you haven't done this, I highly encourage that you do this. Now, you're going to learn, now if you wanted to, you could do this, right? You could absolutely do this. If this is what you wanted to do, you could draw in all of these structure levels. I don't recommend, you could do that. You could absolutely do that if you want. There's nothing wrong with that. I don't do that because really the trend started here, the move started here, and then it stopped here. That's what I see. So you don't have to do it that way, but it's something that you can do. So, okay, now what are we doing? All right, well, look at this. We came up here. We didn't make a new higher, higher, higher close, but we came up here. We retraced, and then we closed above here, making a new structure, a new higher, higher, higher close with regards to this consolidation. You see, we're still kind of consolidating, right? We haven't really chosen a real direction. Okay, but we did break above here, so that this implies we're going to head higher. And are we going to head higher? Well, so far, no. Just kind of consolidating more, drawing everything in at this point when I wasn't before. I don't know why. Probably because I can't really see where it's going, right? Yeah, we'll draw it there. Actually, yeah, we'll skip that. We'll draw that there. Okay, just a lot of retesting, as you can see here. You know, we ended up retesting this high right here, the structure level, and now we're kind of just going lower. All right, now we're kind of going lower, and did we close? No, so we are retesting again. So you see what I mean? Just massive consolidation. The Forex market actually consolidates 70% of the time. Did you know that? 70% of the time. This thing, it just absolutely boggles the mind, doesn't it? What am I doing? I don't want to do that. Let's actually draw this up here. Okay, now we have made a new structure high. We've made a new higher, high, higher close. We have closed above here. We've closed above this level and all the other levels. So we finally have made a new structure high. Hallelujah. And now we're going down here. So let's go ahead and remove all this drawing. So where do you think the market is going now? Well, ideally, because we made a new structure high right here, odds are, I think we're going to retrace a little bit down here. So what we could do is could draw a fib retracement level from swing low here to the swing high. All right, look left, structure leaves clues. Well, we got tons of clues to draw from, right? We broke above here. Is this a false breakout? It could be a false breakout. We could have broken up and then we could continue to go down. So this could absolutely have been a false breakout, for sure. It's totally a possibility, right? And we could draw retracement level right here, put our entry on, and now if we get all the way down here, hopefully this isn't a false breakout, and we could end up making some money. So this is what we're going to do. And we are now going to look at this in the weekly market analysis videos. We are going to go ahead and we're going to look at this, and if this is a trade that ends up being taken, you will hear about it next week in the next weekly market analysis video. So guys, that's how we follow the trend. That's how we identify a trend. You need a 3-point move to identify a trend. Initial low, initial high, a new higher low, and a new structure high. Okay? Same thing with regards to a bearish trend. Initial high and initial low. A new lower high and a new structure low. Let's go ahead and actually draw that in just for fun. Okay? Aha. Ha 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 ha. Let's go ahead and do some text. Where's the T? Here it is, right here. We had our initial high. Alright. Put that right there. You know, I don't like that color. What color would you guys want it to be? You want to just do white? Ah! That's not the color that I want. White? Sure. It's kind of off-white, though. It's kind of weird. Sorry, I know most of you don't really care about this one lick, right? But right there, okay. But since we're doing it on a black background, it actually does make sense to do white. So let's do initial high. We had our initial low right here. Advertisements are getting annoying. I really just need a pro account. I've actually wanted a pro account for a while. Our initial high, initial low, a new lower high. As you can see right there. Yeah. It annoys me when these lines don't line up. That's cool. So a new lower high, because this high is lower than the first high, right? Or the previous, I should say the previous high. This high is lower than the previous high. And then a new structure low. Or you could say a new lower low. Like I said before, it doesn't really matter. New structure, new lower low, new structure low, whatever. We had a lower low, lower close of the candlestick. This is how you identify a bearish trend. Okay, just like the bullish trend we went over at the beginning of the video, this is how you identify a bearish trend. All right, so pretty cool stuff. So 3-point move: initial high, initial low, new lower high, new structure low. Okay, the opposite is true for the bullish side. Initial low, initial high, new higher low, new structure high. All right, that's how you identify a trend. That is the composition of a trend. That's what composes a trend. And I highly encourage, if you want to practice structure analysis, you want to practice price action, is what it's also referred to. Technical analysis, go in and do what we just did. Draw all the blue stuff. I mean, draw the lines. Draw all the blue lines. Okay? That will really help you to understand and identify trends a lot easier. It's really, really good practice to do. So I highly encourage it. All right, well, that is it. So we covered a brief lesson that I wanted to cover. I'm actually going to clip that. If you're watching this on the weekly market analysis video, I'm actually going to clip that out. And I'm actually going to post that as a separate video on the YouTube channel as how to identify a trend and the composition of a trend, or so. I'll title it something like that, just for those of you guys. I mean, because that's a small little clip section that can really, really be helpful for people who don't really want to watch the longer weekly market analysis videos, because I know there's a lot of you guys out there who don't really like how long these videos can get. It's my thing, so I don't mind them being long. I think they're chopped full of information, and I think they're very, very positive to do and to watch. I'm the kind of guy that if I'm really fascinated about a subject, I don't mind watching a long video if I know I'm getting good content. In this case, I'm trying to provide the best free content for you that I can possibly provide. So, that being said, I wanted to, let's go ahead and talk about something here. I wanted to talk with you guys a little bit more about what we were talking about at the beginning of the video. I didn't want to just leave it there. And I didn't want to say that I was going to talk about it towards the end of the video because, well, to be honest, I didn't know if I was going to remember that, because I remember the last time I said I wanted to talk about a whole bunch of stuff, and I never did. Actually, I may have cut that part out, so you guys may not have actually known that. Well, anyways, in the last video, I cut out a whole bunch of stuff that I said I was going to talk about at the end of the video, and I never actually did. So I ended up cutting it out. But to be completely honest with you, I really wanted to cover it. I just ended up forgetting, and I ended up covering a completely different, very relevant, very good topic. That said, though, why are we doing this? What is the point of becoming a consistently profitable trader? The point is to control the source of your income and becoming financially free and having what we like to call, or what I like to call, mobile income. You can make that money no matter where you are. It's mobile income. And I love the concept of mobile income. I love the concept of becoming financially free and controlling the source of your income, right? I love that. I love all of that. But why do we do it? What's the point? I mean, you're already working a 9-to-5 job. You're probably asking yourself, what is the point of doing all this? And the point is to become financially free. But why? Why do you even want to become financially free? If you don't know the answers to this question, you need to start asking yourself this. Your why is really, really, really going to define why you're doing this. And it's kind of like the foundation. And I've talked about this in previous videos. It's the foundation of what you're doing. But look, the reason that we're doing this is because we want the freedom of time. We want to be able to make money on our terms, not on somebody else's terms. We don't want to have to work for somebody else making them rich. We want to work for ourselves and make ourselves rich, but we also want to be able to control our lives. We want to be able to control our time. Time is a non-renewable resource, ladies and gentlemen. It is. What you lose in time, you don't get back. We have a set amount of time here on earth. We don't know how long it is. Only God knows that. Okay? Only Jesus knows how long we're going to live our life, how long we have on this earth. We don't know. We can't see the future. Use your time wisely, right? But this is why. I wouldn't want to waste away in somebody's office if I had the choice. I wouldn't want to waste away in some warehouse being an inventory person, which is the only kind of experience I actually have when it comes to having a traditional career. I have all this experience of, social media marketing, or at least I'm getting some experience in that. I don't have a ton of it, but I do have some. I've got all this experience with regards to, creating content, blogging, video recording, doing these, podcasting, I'm learning so much, trading, personal finances. I actually have a lot of experience in personal finances, a lot of positive experience. We all have a lot of experience in personal finances, right? Because, well, let's be honest, we all have personal finances. But my wife and I have always been very, very good about controlling our finances really well. And I'll probably create some other videos in the future about that, because it's important that you need to have control over your finances in order to become financially free. If you're spending every dime that you're making, if you're, for lack of a better term, pissing it all away, then, you're never going to get anywhere. You're not going to become financially free. You don't even know how to control the money you have, let alone if you acquire more. Which is why you see a lot of wealthy people earn a massive amount of money, like professional sports players, actors, song artists, sometimes artists like painters, whoever. Sometimes just any average person. They fall into a lot of wealth very quickly, or sometimes it takes a long time, but in the end, they never knew how to manage their money in the first place. So their expenses rise with their income levels. And so they have really good income levels, but their expenses constantly rise. So they get the $1 million house, they get the really fancy car, and they end up raising their expectations and their expenses so high to the point that they actually end up going broke at some point. Michael Jackson. Look at Michael Jackson. All right, a lot of people don't really want to talk about the guy because there's a lot of controversy around him. The king of pop, I think is what he was called. But anyways, look at his finances. When he passed away, was he a wealthy man? No, he was broke. He was in over his head in debt, a lot of debt. The man didn't know how to manage his finances. He gave the impression that he was living this fancy life, and he was. But man, he was broke. He never knew how to manage his finances. He wasn't really financially free. Financial freedom isn't just about controlling the source of your income. That is one portion of it. But financial freedom is also about controlling your finances. So if you don't know how to do that, you need to. But look, one of the reasons that we're getting involved is for the freedom of time. Time is a non-renewable resource. We don't get it back. Like I said, only Jesus knows when we're gonna die. Okay? Only God knows that. We don't know. Let that sink in for a minute. We don't know. So we're doing this so that we can live life on our terms. We don't have to ask someone to go on vacation. Heck, if we want to go on vacation, we just go on vacation. We don't have to ask someone for permission. My time is mine. And I want to use it to the best that I can. I don't want to throw it away. I want to use it to spend time with my family. I want to use it to go and travel. I want to use it to, for my own business and to make money, yes, but I want to use it more importantly to have more time with my family. That's the reason I'm doing this, for the freedom of time. So with that said, you don't want to waste away at the charts like we talked about before. We need to efficiently optimize our time. And you don't want the business to control you. You don't want to work so hard at your business to the point that it controls you. So I guess what I'm really trying to get at here, guys, is that there's so many people who end up becoming business owners, and they end up doing 1,000,001 things, and now they're even busier than what they were when they had a normal 9-to-5 job working for somebody else. They were miserable doing that too. One of my mentors was living that kind of life. He did all of this for the freedom of time because he was in the military. He wanted to spend time with his family. He ended up, creating this business, multi-million-dollar business. He was making a lot of money. He was living the good life. He was miserable. He was miserable. He wasn't living the life that he wanted to live. He wasn't going out there and living the life and just saying, hey, you know what? I'm just going to take the day. I don't really feel like working. I've done a ton of work already. I'm tired. I just want to take the day. How amazing is that to have that kind of life? Seriously, how amazing is that? To have that kind of life to where you can just decide that I just want to take the day. It's absolutely amazing. It really, truly is. And it's something that we all want, but very few of us ever try to acquire. So guys, you're doing this so that you can live your life, right? You're doing this so that you can ultimately control your life and you can live the life that you want to live on your terms. Make sure you're actually living that life. That's the ultimate message of today. That's actually what I'm probably going to title this video. Make sure, or something to that effect, make sure that you're living the life you're actually working towards. I want more time to spend with my family. I want to spend it doing the things that I love. So I want to make money so that I don't, and pay someone to, mow my yard so I don't have to do it. I'd rather spend time with my family than to mow the yard. But I need money to do that. if I have to mow the yard, it's not the end of the world. I'm not. Please don't take it offense if you like mowing the yard, then great. If you don't have the finances, and figure a way how to make more money so you can pay someone to mow the yard. Whatever. If you don't think it's a big deal and you don't mind doing it, then fine. I'm not trying to criticize you, but for me, I don't like doing it. I hate it. I'd rather spend time with my family. That's what I'm working for. That's what I'm working towards. Spending time with my family. And I'd also like to have time to do things that I enjoy as well. And that's more than just my family, of course, but, things that I find enjoyable. Make sure you understand why you're doing this, because that's the foundation for why that's the foundation of it, right? But also make sure you're living the life that you're working so hard to achieve. Don't work and work and work until you're miserable, because then you're no better off than what you were when you were working for somebody else. Make sure that you're living the life that you were trying to work towards, that you're working to live. All right? Don't let the business control you. You control the business, and then you take time off, and you take time to relax and enjoy the life that you've built for yourself. Otherwise, what's the point? All right, guys, this has been a very, very long video. I do apologize. This is an hour-long video, so I might end up cutting some bits out here to try to get it to be a little shorter. I might not. I might just end up keeping it. I think there's a lot of information in here that's good. I might break it into a part 1, part 2, or I might just leave it as one whole video. I don't know. I'll have to decide in my post or my production when I'm editing videos, which I hate doing. And I especially hate the fact that I've got an hour-long one to edit. I hate that even more. That being said, if you haven't checked out the website, go check it out. It's newmillenniumwealth.com. I know that's a mouthful. Join me on my journey to become financially free and learn how to generate wealth that'll last for a millennium. That's the whole idea. I thought that sounded cool. So, anyways, but check out the website. We got lots of stuff. I'm starting to post my podcast on the website, which is great. We've got the Matthew Spazzini Program podcast here. We are now officially on iTunes. Make sure to check that out. Excerpts from the weekly market analysis are going to be posted on the Matthew Spazzini Program. Every other episode, it so far is appearing to be. So, yeah, we're on episode 11. Is it really surprising that the Federal Reserve is now buying corporate bond ETFs? No, it's not. But it does mean something, and it's not positive. That being said, guys, check this stuff out. Go check out the Matthew Spazzini Program. You can either go to the MatthewSpazziniProgram.com.podbean. Actually, it's really .podbean.com. You can either do that, or, you can go to iTunes, which is much easier. And, hey, if you do, make sure to give me a rating. Make sure to give me a review and rate. Help me to become the top #1 podcast on iTunes. Also, you can check the podcast out on the website. You can check out these videos on the website. So yeah, go ahead and check out the stuff that I've got going for you on the website. It'll show you I got Facebook, I got Pinterest page, got Twitter page. Check all that out if you're interested. And most importantly, if you like the video, give it a thumbs up. If you like the channel, you like what I'm doing, subscribe. If you do that for me, guys, I'll see you guys in the next episode. Remember, as always, know the risks, plan accordingly, and have a great day.